Okay, very good morning to all our investors here. So I think we had an earlier session this year. We talked about, why ETF and why bond, right? So specifically today, I'm going to talk a little bit about how to use ETF building a better portfolio, right? So I often get this question. People ask me, what is the difference between ETF and UT? Right? That's the first thing that I come in. The first question that comes to me when I talk to a client about ETF, right? So they say, hey, I've been investing in UT, so why are you telling me ETF now? So what is ETF exactly, right? So after this session, hopefully you guys will, the key takeaway would be, you will know what is ETF and, how ETF going to help you build a better portfolio. Okay, so to begin my session today, I'm going to start off with one picture, right? To paint a picture, to give a better context of what is ETF and what is UT, right? So we have EVs and petrol car, right? So to be a bit more relevant to our retail investors today, right? So EV is basically ETF, and petrol car is always the traditional one, which is a UT. Okay, so we always have been debating around, right? So let's set aside the investment, give a better context. We talk about EVs and petrol car, right? Which everybody knows about cars, right? I believe everyone owns a car here, right? So everybody knows about EV, everyone knows about Tesla, everyone knows about BYD, right? So everyone talks about EV, it's more quiet. I think even our GM drive for Tesla, right? He thinks that it's more quiet, it's nicer to drive, better acceleration, lower maintenance costs. There's no, regular maintenance and all that, right? So that's ETF. And on the other hand, people will talk about, EV battery tend to release radioactive from the batteries in the car. So in the long run, it's bad for people who are sitting around the car, right? So, and also people were talking about battery, after 5 years, 6 years, am I going to replace the battery with a very high cost? So that's always the concerns about EV, right? So then we have another supporter from the petrol car, right? So petrol car will say, driving an EV, I will have a worry of range, right? Because if I travel outstation to Penang, or maybe I want to drive all the way to Thailand, probably I can't do it, right? And the current infrastructures for EVs is not stable yet. I need to sit at the station waiting for 2 hours to charge up my EV, right? So better to get a petrol car and a better resale value, right? So that is ETF and UT, right? It's the same. But if we take a step back, EVs and petrol car, they are both vehicle, right? They are both cars. So do EV get you from point A to point B? And petrol car do get you from point A to point B, right? So what I'm trying to illustrate here is that basically EV and petrol car is just a car get you from point A to point B. Exactly ETF and UT, right? It's an instrument that gets you to achieve your financial goal, right? As straightforward as that. So we have talked a little bit about the difference between EVs and petrol car, then we relate back to UT and ETF, right? So, but there is certain difference, in UT and ETF in nature, right? So this is what you need to know most before you start investing, right? So I have actually did a summary of the categories between the differences between ETF and UT, right? So ETF basically is on the exchange, right? During the trading hours, the price move up and down. So having said that, you have a better control or flexibility in terms of what price I want to sell, what price I want to buy, right? As compared to a traditional unit trust, it's actually true, you have to buy through a distributor, like us, FSMOne, we are a distributor, right? And it's only priced once a day. And that means that if I buy today, I will not know what price I'm buying. I know, I'm probably buying around the range of this price, right? So next, which is a pricing, right? ETF give you real-time pricing, which I mentioned earlier, right? So throughout the trading, you can trade. You can buy at a low, you can sell at a high within the same day, right? But in your UT, it's always a forward pricing, right? Let's assume it's a T+2 settlement. That means if I buy Monday, it will settle on Wednesday. The price that I'm getting is on Wednesday. It's not based on Monday, right? So that kind of forward pricing and one day, one price. Okay, then move on to fee and charges for ETF. It's generally lower. Of course, there will be a brokerage fee applies. And also on UT, it's generally, have a higher expense ratio as compared to ETF, right? Simply because the format of being executed, one is on the exchange, the other one which is through, a bit offline through an agent, through distributor, right? So the fee is generally higher for UT. Okay, next, which is a transparency, right? ETF disclose their holdings, all their holdings, on a daily basis or through a public website. So versus UT, they probably disclose about 5 to top 10 of their holding. So having said that, when you invest in a certain thematics or when you invest in a certain sector, right, you would specifically know in this specific ETF, what is this ETF investing? And is the holding of this ETF underlying of these securities aligned with your investment objective, right? So that transparency really help you, what ETF is providing. Whereas UT only give you top 5, top 10. And then the rest of it, you don't know. It's up to the fund managers to decide, okay? Next, which is the flexibility. I will not talk too much of that. I think traditionally, ETF is a DIY friendly. That means that you can execute it, you can buy and sell through a brokers on the platform, right? And then UT usually through an agent, right? But today that's not the case because FSM coming into the space of UT, we actually digitalize all the process and basically you can buy sell on UT online as well, okay? And in the past, ETF are mostly passive. That means that they track certain indexes. S&P, KLCI, Hang Seng Tech, Hang Seng Index, the Nikkei, right? So ETF tend to do that, right? That's the old ETF that we know, right? But that's not the case today, right? And UT were used to be mostly actively managed, right? But that's not the case in this, in this era now, right? I'm not going to talk too much about it because, right after me, there will be a session by Carver, one of the global largest asset management. JP Morgan will talk about active ETF, right? So next, which is the access, right? Again, I mentioned ETF is easily accessible on all the exchanges. That means that you have access to Bursa Malaysia, you have access to US Exchange, you have access to London Stock Exchange. It's there. If you have a platform that access to ETF, everything is there, right? As compared to UT, it requires a distributor to set up that fund. So you would tend to see, why this fund A is not available at certain platform, and why fund A available at our platform, right? So that backs to what Jun Yong mentioned. We have certain fund selection, all the criteria and all that. So last but not least, a very important point for ETF and UT. ETF offer you a wide range and offer a broader universe and investment idea, right? I think currently our platform, we are just over 4,500 ETF available on the platform. That's a big space we are talking about as compared to UT, right? So move on to next. So we have talked about the differences between UT and ETF, right? So we also acknowledge that both of them are just the same instrument. It's just an instrument that will get you to point A to point B, which is achieving your financial goal, right? So, but how to include ETF, in your portfolio, right? I think my colleague Jane has talked about on the global landscape, a lot more uncertainty this year. I think the first half, we also have experienced, especially Trump's announced, tariff during the Liberation Day. And then also the monetary policy also kind of gray now. We think that there's 2 rate cuts in the US, but we don't know when, and we don't know whether it's happening or not, right? And then Trump actually approved a big bill on the fiscal policy, right? So all that really impacting the market and, from all the asset classes, right? So having volatility and certainty in the market, having certain instrument, right? Or maybe you have certain ideas because market been going up and down, right? So maybe you want to capture certain trend. For example, uncertainty time, everyone goes to gold, right? I think at the peak, gold are close to $3,500 per ounce. And also now, it's a Bitcoin time, right? Cryptocurrency time. Ethereum has also achieved a record high, and Bitcoin just surpassed $120,000 a few days back, right? So there is a lot of opportunities just beyond a traditional investment, right? So particularly in Malaysia, right, ETF offers you opportunities beyond just UT. There are a lot of opportunities in the US, in the Western country, in the Europe. For example, right, through ETF you can get exposure listed, for listed PE firm. Historically, private equity firm offers you double-digit return, after 10 years being analyzed. So that sort of figures we are talking about. If you think that bond, fixed income, it's gonna be, I'm not too sure, where, US Treasury is heading, which ultimately affecting the rest of the bond pricing. Then, and at the same time, you want something a bit more predictable, a bit more higher return side, maybe private equity fund is something for you, right? So again, I'm not here to give recommendation. I'm just painting a picture, giving you guys a context, what ETF can help you to do, right? And then tariff, right? I think the trade talk was still going and being extended to August. So from the bond perspective, on the fixed income perspective, I think a lot of players in the industry is no longer doing duration play, right? Market also saying that there are a lot of the inflation expectation have not priced in, because even the Fed doesn't know what is the impact of tariff, on inflation, right? So instead of investing in a traditional US Treasury bond, you can invest in inflation-protected securities. ETF give you that exposure, right? You don't have to select individual inflation-protected securities. Just invest in an ETF, and that ETF does the job, right? And then next, riding on the trend of a Bitcoin. So, friends around me, they want to invest in Bitcoin. I also heard stories about people investing in Bitcoin. It ended up, it's a scam, right? Because they put in 10,000 and 20,000, ended up, it's not a regulated, not a legit platform, right? So, but through ETF, you still get that Bitcoin exposure, and you basically is regulated by the US exchange, right? So regulated by US SEC. It's equivalent in Malaysia with the Security Commission, right? And then ETF also hold, there is ETF actually hold gold, silver, platinum, and palladium, which is gold. I think everyone was talking about safe haven, whereas silver is a very important element for semiconductor, which is a theme that we like, right? So ETF really give you that opportunities beyond UT, right? So next, we talk about ETF also give you a certain exposure in thematic investment idea. So earlier on, my colleague James talked about we like digital economy, we like semiconductor, and also there is a lot more uncertainty coming this year, right? So ETF also allow you to invest in the digital economy, very thematic. That ETF only invests in tech-related, AI-related, right? And also ETF can also help you to invest in the staple products. That means that among Coca-Cola, among Walmart, among all these P&G, but what kind of weightage and who should I invest into, right? So invest in an ETF, the fund manager will do it for you. And most importantly, the expense ratio is much lower, in the ETF space. And also this year we talk about Europe is going to increase their military spending. In US exchange, there is ETF that give you exposure specifically to US military defense contractor, right? That means that you expect that Europe increase military expenses. Having said that, these US contractor, military contractor, they will receive more sales. People are buying more guns, people is buying more, fighting jets and all that. So how to benefit from here? ETF give you that opportunity through thematic investment, okay? And then, the basic one, the healthcare, which is growing steadily over the years, right, as the population has been aging. Okay, so the next one, ETF also allow you to do tactical play, right? We know market been going up and down. We know during a Liberation Day, market tanked about 20%. So tactical play are usually for short terms and a high conviction strategy. If you think that US is going to make a strong comeback, Then maybe when the market tank 20%, I mean, this is experience, may not be always true, but when the market tank 20%, usually market will recover at least 10%, right? A strong rebound from there, right? Of course, unless we are talking about structural changes on the underlying, right? So if you have a strong conviction over certain industry, over certain strategy, right? So ETF can also allow you to do leverage. That means you can go up to 3 times. That means, let's say I'm really positive on gold. I think gold will really go up a lot more from current level, right? Just buy a 3x ETF. That means that $1 increase in ETF, effectively you are gaining 3. Right? Of course, the other way, when the dollar come down by, the gold come down by $1, and your position will also lose $3, right? Because you are leveraging. And also, during a volatile time, there is ETF, which is VIX, that tracks a VIX future. So VIX is, how to benefit from VIX basically is market up and down, there's a lot of volatility, VIX will tend to go up in price, right? As simple as that. And also, other than just leverage, 3 times investing in VIX, there's also an inverse ETF. That means that instead of traditional that we only long only, that means that we're only buying certain ETF we think is positive. Now I'm not so positive on this ETF. In fact, I turn negative. But I can't really take advantage because traditionally there's only long, right? ETF also allow you to do inverse. That means that I'm betting on a certain underlying securities that I think is going down, right? So that's the tactical play where ETF really can give you where UT probably can't, right? Okay, so the last one, which is investing in niche market. So I think upfront, I just want to say sorry to all the ladies and gentlemen. Good news for you. I will just skip the rest. I'll talk the main point, right? So niche market. How many of you all did know that ETF give you exposure into LVMH, which is Louis Vuitton, Dior, MS, all this kind of exposure? ETF do give you that. I'm sure your girlfriend, wife, or your 小三, I don't know, will probably ask you, hey, honey, can you buy me a bag? Right? This is often what I get as well, lah. So then I said, waste of money, lah. Why would we spend 50K for the bag, right? Then your wife or your partner will probably tell you, hey, this is for investment. You see, bag have actually grown up tremendously. LV bags have been going up, right? Back then, how much? 5,000 per wallet, per purse. Now could go up to 9,000 or 10,000, right? So it's a good investment, right? Probably the partner will convince you. Sorry again for the ladies. So ETF, then the guy now can actually tell your wife or your partners, invest in this ETF. It is also an investment, right? So in niche market, there are a lot of exposure where UT or certain funds is not covering, right? But in ETF, they are covering. And the niche market is specifically very hard to select because you don't know which one is coming up, which one is a future trend. So leave it to the ETF managers, the fund managers to do that for you, right? And then ETF, niche market ETF can also invest in, rare earth mining, if you think solar energy is the future, green energy, and then autonomous driving, right? EVs and all that. Okay. So I think I've painted the picture about what is ETF, what is the difference between UT and ETF. I also mentioned a lot more about the benefits of ETF and how can you build a better portfolio with ETF, right? So if I'm considering a car, back to the previous example that is not relatable to everyone, right? EVs and petrol. If I were to consider a car, buying a car, I will probably have both. Because driving in town, EV definitely make more sense, right? Because I get to park at an EV charging station where I don't need to think about the parking, and it's cheaper to maintain, and also it's cheaper to charge EVs as compared to pump petrol, right? Of course, now we still have that subsidies, but our Prime Minister was talking about removing that subsidy, right? So for me, I would definitely want to have both of this. Of course, if budget's allowed, right? Cars nowadays is not cheap, and we need to take in that sort of depreciation, okay? So, But in investment world, that's not the case, right? We are not talking about buying an EV or Tesla cost you 200,000, right? In investment world, ETF and UT can go as low as 1,000, right? So you should really consider having both in your portfolio. So hopefully after this session, I think all our UT investors can really start exploring the ETF space. And I promise, you know, all the ETF on our platform is really interesting, and the journey is going to be rewarding. Okay, I think with that, I will end my presentation here. Thank you.